Mark Skousen claims you can profit from global growth with a single stock, and I reveal it in this video for free. Now, you don't need to buy Skousen's newsletter to learn the stock. If you appreciate me doing this for you, drop a like and subscribe for more free stock giveaways. Before I reveal the stock, let's take a look at Mark Skousen's stock picking performance. Back in November 2016, Mark recommended Merck as a cancer killer stock. Since then, the stock is up around 117%. And when you factor in dividend payments, the stock has slightly underperformed the market. However, I have no clue if Mark recommended selling the stock at any point. Overall, this has been a pretty good stock pick. In August 2018, Skousen recommended natural resource stock Rio Tinto. The stock has been up and down and does offer a high dividend of over 6%. Whether this stock was a winner for investors relies mostly on whether it was sold at the right time. In January 2019, Skousen recommended Pfizer for a drug they were producing that helps arthritis and IBD. Luckily for Pfizer investors, COVID hit soon after this recommendation and the stock skyrocketed, along with offering a nice dividend. In May 2020, Skousen recommended Midas Gold as a cheap gold stock that could possibly gain 1,000%. It didn't quite reach those heights, but did gain 350% quickly after being recommended. If you timed this one right, you could have made a lot of money. Back in June 2021, Skousen claimed investing in B2 Gold is the best thing you can do to grow your nest egg. However, since being recommended, the stock hasn't done well. As part of Skousen's Biden disaster plan, Mark recommended a couple stocks. The first was Enterprise Products Partners, and this stock is up a bit since being recommended, but is trailing the market overall. Alpha and Omega Semiconductor is the second stock that was recommended in this teaser. Mark somehow picked the semiconductor company that hasn't done well in the last couple of years. I'm going to reveal Skousen's stock in the next section, but before I do that, I want to tell you about gold IRAs. A gold IRA provides a hedge against inflation and market volatility, ensuring a more stable and diversified retirement and savings portfolio. To learn more, click the link in the description below to get your free gold IRA guide from Augusta Precious Metals. The stock Mark is pitching in this teaser, as the one stock to get rich off of, is Main Street Capital. Main Street Capital is a publicly traded investment firm that focuses on providing long-term debt and equity capital to lower middle market companies. It invests in established businesses with annual revenues between $10 million and $150 million, offering flexible financing solutions to support management buyouts, recapitalizations, growth investments, and acquisitions. Main Street Capital aims to generate both current income and capital appreciation through its diversified portfolio of investments. One of the most compelling reasons to consider Main Street Capital is its robust dividend yield. As of mid-2024, Main boasts a dividend yield of approximately 7%, which is significantly higher than the average yield in the broader market. This attractive yield is a testament to the company's consistent performance and commitment to returning value to its shareholders. Another key advantage of investing in Main Street Capital is its unique business model. Main primarily invests in lower middle market companies, which are often overlooked by larger investment firms. By targeting this niche, Main Street Capital can identify high potential opportunities that offer substantial returns. These investments are typically made through a combination of debt and equity, providing a balanced approach that mitigates risk while maximizing upside potential. Main Street Capital's diversified portfolio is another major plus. The company's investments span various industries, including manufacturing, energy, and healthcare. This diversification helps cushion the portfolio against sector-specific downturns and contributes to more stable overall performance. Additionally, Main has a strong track record of prudent management and strategic decision-making, which has helped it navigate economic fluctuations effectively. Furthermore, Main Street Capital has demonstrated impressive financial resilience and growth. Over the past few years, the company has consistently reported solid earnings, supported by its disciplined investment approach and the strength of its portfolio companies. This financial stability not only underscores Main's ability to generate steady income for investors, but also positions the company well for future expansion and growth. Lastly, Main Street Capital's internal management structure sets it apart from many other business development companies. Unlike externally managed BDCs, which may face conflicts of interest, Main's internal management aligns its interests closely with those of its shareholders. This alignment fosters a shareholder-friendly approach and enhances the company's long-term value creation. Let's shift gears and explore some of the cons of investing in Main Street Capital. While Main Street Capital has many strengths, it's important to consider some potential drawbacks before making an investment decision. One significant concern is the inherent risk associated with investing in lower middle market companies. These companies, although potentially high yielding, can be more vulnerable to economic downturns and market volatility. Unlike larger, more established firms, lower middle market companies may lack the financial resilience and stability to weather economic challenges, which could impact Maine's portfolio performance. Another downside to consider is Maine's exposure to credit risk. Given that Main Street Capital's business model involves a substantial amount of lending to its portfolio companies, any deterioration in the credit quality of these companies could lead to loan defaults. This scenario could adversely affect Maine's earnings and dividend payouts. In times of economic stress, the risk of defaults increases, posing a significant threat to the company's financial health. Main Street Capital's reliance on external financing is another potential risk. To fund its investments and maintain its operations, Main often relies on raising capital through debt and equity offerings. In a rising interest rate environment, the cost of borrowing increases, which could squeeze the company's profit margins and limit its ability to generate attractive returns for shareholders. Moreover, issuing additional equity can dilute existing shareholders' ownership stakes, potentially reducing the value of their investments. Lastly, the regulatory environment for business development companies like Main Street Capital can be complex and subject to change. Regulatory shifts can impact the company's operations, investment strategies, and compliance costs, potentially affecting its profitability and growth prospects. If you found today's content valuable and want to protect your financial future, check out Augusta Precious Metals' Free Gold IRA Guide. It offers insights on diversifying your retirement portfolio and shielding your savings from inflation. Click the link in the description to get your free guide and secure a golden future. Take care.